Well, you've seen the videos. Some guy on Instagram standing next to his lifted truck, bring light in his face, branded hat, big watch. He says, "Hey guys, buy a heavy truck, write it off the whole thing, and pay zero taxes." And then he laughs. I'm a CPA. I work with California builders every day, and it drives me crazy when I see this advice. So let me show you why this is such a trap. I'm Sammy Basta. I run Basta and Company. It's a San Francisco-based accounting firm, and we work with builders all across California. This is the first episode of CPA React, where I break down the bad tax advice you see online so you don't get burned by it. So let's go. First, what's the Instagram guy actually saying? It's called the heavy vehicle deduction, Section 179 plus bonus depreciation. The IRS lets you write off business vehicles over 6,000 pounds. Most heavy-duty trucks qualify. So like F-250, F-350, Ram 2500s, Ram 3500, all these heavy trucks qualify. You can deduct most of the cost in 1 year. That part is true. But here is where it falls apart. Problem number one, you have to actually use it for business. More than 50% of the miles must be business miles. No commuting, no personal. So if you drive your truck to dinner or to the gym or to your kids' school, those miles don't count. The IRS doesn't care if you're a builder or just a regular taxpayer. They care about the log. So if he cannot prove the business use, the deduction goes away. And you owe back taxes plus penalties. The Instagram guy doesn't talk about that part, right? Problem number two, you're still spending real money. Look, I'm not anti-truck. I'm anti-stupid. A loaded F-350 is $90,000. Even with the full deduction, you save maybe, $30,000 in taxes? So do the math. You spend $90,000 to save $30,000. That's not a tax hack. That's just buying a truck with a discount. If you needed the truck anyway, different story. But buying a truck to save on taxes, you make yourself poorer by $60,000. Problem number three, in California, it gets even worse because California doesn't follow the federal bonus depreciation rules and it limits Section 179 deduction. So even if you deduct it on the federal, California makes you spread it over 5 or 6 years. Your state tax savings are way smaller than the federal. Yeah, and the Instagram guy didn't even mention that part either. Stop for a second. If you only remember one thing from this video, I want you to remember this. A tax deduction, it's not free money. You still have to spend the dollar to get the deduction. The only question is, did you need to spend the dollar anyway? If yes, well, great. Take the deduction, enjoy the tax saving. If no, you just bought something expensive to feel smart. That's not strategy. That's spending. Now, let me tell you when this really actually works. So I have a client, let's call him Tom. Tom runs a remodeling crew in Marin County. He needed a heavy truck for hauling materials. So he was going to buy F-250 anyway. He bought one, logged the miles, used it for jobs, and he took Section 179 deduction and saved about $28,000 in federal taxes. That's a smart deduction because he needed the truck. The deduction was a bonus. Well, compare that to another client. I'll call him Jake. So Jake bought a fully loaded F-450 because Instagram told him to. Big lift, custom wheels, cost him about $95,000. And he drove it for about 4,000 miles in the first year. Maybe 1,000 were business miles. So 25% business use. This didn't qualify him for Section 179 at all. So he spent $95,000 and got almost zero tax benefits. Plus, California sales tax, it added up about $9,000. That's a bad day. And that's what's worse. The Instagram guy didn't show up to fix it. I do. So here's the rule. Buy the truck you need to run your business. Then take the deduction you qualify for. Don't buy a truck to chase a deduction. That's a trap. Real tax planning is boring. It's not flashy. There's no ring light, no branded hat. It's looking at your numbers in October, not spring. It's making the right election on time, and it's running your S Corp the right way. That's how you save $30,000 a year every year without buying anything you don't need. Thanks for sticking with me today. This was the first CPA Reacts episode. Tell me in your comments, what was the worst tax advice you've ever heard or received? Maybe the Wyoming LLC hack or pay your kids loophole, the crypto write-off. Drop it below. I'll do a video on it. I'm Sammy Basta. I run Basta & Company. It's a San Francisco accounting firm. All remote, all human. You wouldn't have to, play phone tags. You talk to real people. So if your tax advice come from someone with a, ring light, get a second opinion. I'm the CPA who tells you when the hack is trap. The link down below to book a complimentary call if you need our help and would love to talk to you. Thank you so much for spending time with me today. I'll see you next week.
This has been another episode of our tax saving video series. If you enjoyed this video, please like it, subscribe below, and share with other business owners. You can find previous episodes and more information at www.bastacpa.com. Thanks for listening, and have a great day.